Next, funds. Learning objective 18-8, make calculations and record journal entries for internal service funds. So what is an internal service fund? They account for the financing of goods or services provided by one department or agency to other departments or agencies on a cost reimbursement basis. So what an internal service fund does is it does all sorts of things for the other funds and it charges them for it. So it's kind of like a business because it's going to charge them for it and it's expected to break even. And this is a way for the government to do things a little bit more efficiently and, to make more work for accountants so accountants can make more money. So the example I always like to use is motor vehicle pools. You'll have what's called a motor vehicle pool, and they're responsible for all the motor vehicles. They're responsible for buying them, maintaining them, and so on. And what they'll do is they'll charge a fee to the other funds who are using the motor vehicles. And these are treated as proprietary funds, and therefore the accounting is going to be similar to other proprietary funds. So we have here establishing an internal service fund and purchasing inventory. This is again from the book. We receive money from the general fund in order to start an internal service fund. So journal entry would be to debit cash, $10,000, credit transfer in, and if this had been a governmental fund, it would be other financing sources. And then we receive inventory, so we debit inventory for $8,000 and credit vouchers payable for $8,000. And then we purchase machinery and equipment on credit, so debit machinery and equipment for $3,000, credit vouchers payable, $3,000. Now we're going to do a little bit of work. We're going to sell some stuff to the general fund for $1,000. For some reason, it cost us, it cost us $500 and we collected $1,000. We're going to sell $3,000 to the enterprise fund. It costs us $1,500 and we're going to collect $2,000. So let's first do the charges. I'll debit due from general fund for $1,000, due from enterprise fund, might as well spell it out, $3,000, and credit the account as charges for services. And let's say I collect the money. Excuse me, I'm going to collect $3,000. So I've got my due from general fund, due from enterprise fund. I saw someone doing that, working with my videos in a very efficient way, and what he was doing was he was watching them on his phone while working, having the Excel spreadsheet open on his laptop. That seemed to work pretty well. So operating expenses here is $4,000. I guess that's where this comes from. Oh no, that's cost. This is cost of goods sold above. They paid vouchers of $9,000. They recorded the cost of goods sold that we put up here, and they depreciated the machine and equipment by $1,000. So let's first record these general operating expenses. And you don't just have to have general operating expenses. Obviously, you can have lots of different kinds of them. We're just doing that to keep things simple here. So credit vouchers payable, $4,000. And then vouchers payable. They're going to pay $9,000. I don't know. Let's see where. We don't know what they're paying because they have 8,000 here plus 3,000 here. That's 11,000, right? Plus 15,000, but they're only paying 9,000. So it's not clear exactly what they're paying for. But we'll pay it. $9,000. Then we have this cost of goods sold, which would have been like some kind of, I guess they would be this inventory that was up here. It was 500 plus 1,500. And if you remember, we had originally purchased inventory back here of 8,000. So now we use $2,000 worth of those supplies. And then I got depreciation of 1,000. Credit accumulated depreciation of 1,000. So those would be my expenses. And now again, I'm going to do closing entries. And I had this charges for services of $4,000. All the temporary accounts are going to be closed. Cost of goods sold will be up here. Let's see. Here it is, $2,000. And I had general operating expenses equal to $4,000, and depreciation expense of 1,000. And the difference between these would go to profit and loss summary. $3,000. And then we've got this transfer in up here. Transfer in, wherever it is revenue. It's like revenue, and it's a temporary account. So I'm going to need to debit transfer in for $10,000. I'm going to credit profit and loss summary for whatever's in there, $3,000. And the difference between these, 10,000 minus 3,000 is a credit of 7,000, is going to go to net assets unrestricted. And then I've got to look at my net position invested. So previously, I didn't have anything in my net position invested. Because this is a brand new account. This is a brand new fund, I mean. So I haven't needed to use this account before. So what I need to do is I need to figure out what is my net position invested. My opening balance is going to be 0. Because this is a brand new fund. And if you remember, we purchased machinery and equipment of $3,000. So I've got $3,000 in here, and then I had depreciation over here of 1,000. So the net balance would be 0 plus 3,000 minus 1,000 would be $2,000. That should be the ending balance. So I'm going to need to create this account, create this balance. By debiting net assets unrestricted, because so far there's nothing in this account of net position invested. I think you could call it net position unrestricted also. I think that might be the more politically correct term. Of $2,000. And that's how I got this right here.